breaking news. The digital payment sector is to go parabolic, according to the Chief Information Officer of DALAND Credit Union. We shall hear from him and more, but first, a word from our affiliate sponsor, DCENT Wallet. Your crypto deserves the best protection, so why settle for less? DCENT Crypto Wallet isn't just another wallet. It's safe, secure, easy to use, and supports your favorite cryptocurrencies all at the touch of a button. And now with my exclusive link, you'll save $30 on your new wallet. Better security, smarter investing, $30 in your pocket. Click on the link now and secure your better security today. Okay, so we're going to start with him saying that, and then we're going to go over the whole video, and this will be a reaction. So we will be interrupting the video. If you want to go see the whole video, go find the video and watch the whole video. But we will be interrupting here. So let's go ahead and play exactly what he said, and then we'll go over the whole video. Okay, let's bring that up here. And play.
The largest, if not the only, growing bucket of electronic payments, and that's we're about to go parabolic on that with announcements recent and coming from folks like Square, PayPal, possibly Google, Amazon, Apple weighing in here in third and fourth quarter of 2025.
So that's what he said. We're gonna start this video here. He just said it. We're about to go parabolic. But now we're going to start from the beginning here and then play. We're just going to skip the intro where they have music that might be copyrighted and just play.
Well, we're laughing because
options and maybe what's something across global payments or other on-chain of stablecoins, and just how would you describe the current state of adoption of stablecoins and just even tokenized deposits or other, on-chain financial instruments, across global payments? And what are some misconceptions, and maybe what's something you wish just more people in the industry would know?
John, I'll let you take it first, and I'll comment.
Well, we're laughing because there's a couple of very significant data points that we get asked this question a lot.
Yeah.
So for the credit union leaders out there, and those institutions are particularly significant to us here at our business. I run into too many executives who believe that these are niche, new, unproven technologies, and I like to point out statistics like the market cap of the Bitcoin network alone, that one token, that one global network, the market cap value of that is larger than the entire U.S. credit union industry.
Yeah.
When measured in market cap, it's about 8x or close to 10x the liquidity of the credit union industry. So I think that another misconception is that consumers are afraid of this stuff because it's only used by underbelly types. The numbers around payment channel growths just don't support that. Year over year, we're seeing that digital asset payments is the largest, if not the only, growing bucket of electronic payments. And we're about to go parabolic on that with announcements recent and coming from folks like Square, PayPal, possibly Google, Amazon, Apple weighing in here in third and fourth quarter of 2025.
That this deserves repeating. I'm going to play that over again here.
Around payment channel growths just don't support that. Year over year, we're seeing that digital asset payments is the largest, if not the only, growing bucket of electronic payments. And we're about to go parabolic on that with announcements recent and coming from folks like Square, PayPal, possibly Google, Amazon, Apple weighing in here in third and fourth quarter of 2025.
So fourth quarter of 2025, do we see the Clarity Act passed? These are the biggest names in the payment space. PayPal, Google, all the ones he mentioned there. This is very, very huge for companies like Metallicus, which we know is partnered with DALAND, and very, very huge for ZEBEC, which we know ZEBEC is huge in digital payments, right? And stable coins, they have a many that are connected to ZEBEC, Circle, RLUSD, others, okay? Paxos Gold, Paxos Stablecoin, USG. This is huge, huge, huge.
So, I think that there's a misconception that the financial institutions get to decide what kind of currency or money merchants and consumers use. I see it the other way around. I see it that, this technology has flipped the table, where the merchants and the consumers are now in control, and they actually don't need an intermediary. I think there's great use cases and values that intermediaries and institutions can bring consumers and merchants, but only if they're, doing the work of understanding what these technologies do and how to incorporate them into their business models. All of these technologies are.
So he's saying you don't need intermediaries. Essentially, what he's saying is we don't even necessarily need the banks, okay? The banks need us, and we're going to go into that a little bit more here in just a second. So what he's saying is really you don't need the banks, but this is going to help them, right? And if you look at the title of this, credit unions bet on stablecoins to keep members and liquidity. So they're adopting this to keep members and to keep liquidity, because otherwise you wouldn't need them, okay? So let's go back just a second here.
Are now in control, and they actually don't need an intermediary. I think there's great use cases and values that intermediaries and institutions can bring consumers and merchants, but only if they're, doing the work of understanding what these technologies do and how to incorporate them into their business models. All of these technologies are fundamentally about killing financial institutions. They don't have to kill, but that doesn't have to be the outcome. I think that consumers are not wired to function as trustless, completely disparate, totally decentralized entities. They want a partner. They want a local organization to work with. They want somebody they.
So ultimately, just like I just said there, he said, ultimately, it's about killing them. But honestly, people want a bank. They want a partner. They want to be, they don't really want to do the custodial stuff themselves. They want to just know what's in the bank and it's taken care of.
Can trust. They want good retail service. They want the technology and operational expertise of their institution backing up and protecting their assets. So I think there's a lot of payment volumes and deposit volume and lending volume and consumer adoption and large organization statistics out there that would open people's eyes to the fact that we're very clearly in the era of stablecoin adoption, and I think we're going to expediently move into the era of other digital asset networks being used for payments and settlements. And look, if a financial institution doesn't have a strategy on this, the reality is their competitor is going to be able to move and settle money at a fraction of the cost compared to them. And that's an end game reality. That's a checkmate. If you're in the money business and your competitor can do it exponentially faster, cheaper, and safer than you, then you can't compete. And that doesn't have to be the case for local institutions.
So he said, look, if your competitor can do it faster and cheaper than you, that's going to put you at a disadvantage. And they're going to be able to do that faster and cheaper through stable coins, which both Metallicus and ZEBEC, they have the leg up on. Okay, they're the leader there as far as digital payments go.
I think the only thing I would, kind of amplify for that, if you saw, there was a recent Motley Fool survey that came out, and it was kind of interesting. Close to 60% of those actually surveyed said they're open to a new payment rail, right? So there's already a sign of that openness. I think what was really, interesting was like over 25%. Yeah, I'm already doing it, right? So in our world, in the credit union cooperatives, the message is, you may say, well, my member's not calling me today to ask for this. Therefore, why should I play? The reality, the member's already doing it. They're already involved. They're already engaged in an activity. Philosophically, I go back to the definition of cooperatives. You have some people around, I need money, I need to borrow, right? That kind of peer-to-peer exchange. That's how credit union cooperatives actually became in existence. So in my mind, this is just a kind of modernization, if you would. But I'd kind of underscore all the elements that John shared. This is kind of a wake-up call. And so to your point about, what I want people to understand is the fact that, you no longer have to play offense to be in this game. If you're not playing at all, you're down in a clearly defense. You're defending against deposits. You're defending against encroachment. So 5-10 years ago, I would say, play around with it. This is an offense opportunity. Do you want to be an early leader? I would just say now we've moved into the defense. If you don't have a strategy, you don't have a clear angle on how you're going to approach this, you're really in trouble. So that would be my message and wake up call.
We've consistently, repeatedly encounter with our clients that they have an idea of how much their consumers might be dealing in this space, and their idea is pretty far afield from reality. So one of the things we do is we go in and we help them measure their current user base engagement and deposit outflows on a monthly and annual cycle. And about 18 months ago, it was pretty consistently 1% of deposits leaving institutions on a monthly basis and going to crypto exchanges. Earlier this year, it was about 3%. Now we're seeing it, edge up to 5% for our clients. And we even had a couple clients call us back this year and say, hey, you told us to start monitoring this. And since, Q1 of this year, our user engagement with digital assets and crypto exchanges is up 90%. In 1 year. So one thing I care about is I know a lot of financial institutions have a blind spot here and they think they can wait and see what.
Up 90%. Did you hear that? That Bo's going back and hearing that again.
And we even had a couple clients call us back this year and say, hey, you told us to start monitoring this. And since, Q1 of this year, our user engagement with digital assets and crypto exchanges is up 90% in 1 year. So one thing I care about is I know a lot of financial institutions have a blind spot here and they think they can wait and see what the regulators and legislators tell them what to do. And the reality is the consumers, the merchants, and the large cap, merchants out there, the large shops out there, they're not waiting. They're building the financial future, and they're ready to become the depositor and the payment rail if the FIs are willing to, stay unaware and surrender that territory.
Huge. What this is telling us is, since the new administration, we're getting a large amount of crypto adoption, and what this is also showing us is that, banking is needed. Banks are not, okay? But, you know what I mean? And don't take my word from that. Hear that from a CEO here. Hear that from Monty Metzger here of LCX. Let's go over here and play this, okay? He's going to quote a certain person that said this.
Addressable customer success members. So this kind of community-driven approach had been the center of LCX. Besides unity, we have two other core company values. It's excellence and integrity. So when we talk about the next 5 years, we will be rolling out our vision until 2030. So what's on the roadmap? It's growth of the additional markets. It's becoming truly the market leader in Europe, and then also conquering some other markets, maybe also some innovative new products. Technology is about singularity and exponential growth. We have the opportunity to connect billions of people on the planet. Starting from Europe, currently from the 450 million population, over 10% are holding and buying crypto already. So let's say 50 million people. But it's a little bit like the evolution of social media at the beginning, where we thought MySpace having 100 million users is a lot, and now seeing Facebook having 3 billion. That's where we are, kind of in the middle. So if we talk about the next 5 to 10 years, it's about global adoption. And basically the term of blockchain will probably fade away. It will just be money. It will just be investments. It will just be community tokens or utility vouchers. We do have a universal utility token. That's the LCX token, and it's at the core of what we do. Currently, you can pay fees at the exchange with it, but it also has been used for tokenizing assets. So every time assets being tokenized, there's a fee which needs to be paid in LCX. What we've now seen is, as the token has emerged to be in the hands of the community and our users, there's really a circular economy. It's a core of LCX. Beyond the spot exchange, there are two upcoming large opportunities. One is what we called blockchain banking. So Bill Gates in 1993 already said, banking is needed, banks are not. We do see that a lot of the banking services is empowering people who have never had a bank account, people who don't want to have a bank account. All this smartphone generation, the digital natives, they're so hooked to their wallets, they don't even need traditional banking services. So we do see.
So this is just exactly what I've been telling you guys, right? This is what we see ZEBEC doing. They're leading here in that World Mobile partnership with World Mobile Token. They're seeing that people are using their phone, their smartphone, as a wallet. Okay, so they don't necessarily need a bank. Their wallet is their bank. Their phone is their bank. Their phone is their wallet. Okay, so again, he might have quoted Bill Gates, and I know a lot of people might have a problem with him, but again, he's right on this one. Banking is needed. Banks are not. Okay, so let's go back and hear that one more time from Monty here.
Community and our users, there's really a circular economy. It's a core of LCX. Beyond the spot exchange, there are two upcoming large opportunities. One is what we called blockchain banking. So Bill Gates in 1993 already said, banking is needed, banks are not. We do see that a lot of the banking services is empowering people who have never had a bank account, people who don't want to have a bank account. All this smartphone generation, the digital natives, they're so hooked to their wallets, they don't even need traditional banking services. So we do see a lot of.
So, and I pointed this out too with LCX and things like this moving towards LCX Pay, right? We already have Metal Pay, right? We already have ZEBEC with their ZEBEC cards. Okay, so they're moving towards having the banking, but not necessarily needing the bank. Okay, and this is led by companies like Metallicus, companies like ZEBEC, companies like LCX. Okay, this is very, very clear what's happening here. What do you guys think here? Like, does it not move you here? What we're hearing from Monty Metzger, what we heard from Metallicus's, general manager, what we heard from DALAND's chief information officer, right? We're hearing that crypto adoption is succeeding. We're hearing that digital payments are about to go parabolic. Now, I know the market is down right now, a little bit, okay? But can you hold on until things go parabolic, okay? Because a lot of times the markets will do this, okay? They will go down before they go up very sharply. So I know what I hold. I know that I'm very convicted in the coins that I hold. What do you think? Let me hear in the comments. Please put DALAND. And I know you got to the end. I want to hear your comments about LCX, your comments about Metallicus, and your comments about ZEBEC. Thanks so much for watching, guys. I'm out. Peace.